Dear subscribers, as you know, we shared many information for you, and we are studying very hard to find current news for you. However, I cannot use this channel for future. Please follow our new channel called as Daily News Report and watch our video to support us. Link in description. Also, you can reach the video we shared on Daily News Report by clicking on the top right button. We highly recommend watching, subscribing, and sharing. We will continue to share some news on this channel, but we take precautions against some situations for future. Thank you for supporting us.
Bill HOLTER does not hold back, and we've got a taste of him before. Here he is once again. Bill, thanks for coming up.
Thanks for having me, Kenneth.
Bill, there seems to be lots of dysfunction currently in the markets. Uncertainty with rate increases. Gary Cohen just left the White House out of disagreements on the tariffs. And Wall Street is falling today as we speak, as Cohen's exit adds to the quote-unquote trade war fears. So let's get your thoughts on this as it relates to the economy.
Well, first off, absolute free trade is best. But that's not what we have in the world. We do have, there are tariffs all over, and many of the deals that the U.S. has done in the past have been U.S. negative. And that shows up in the trade deficit numbers. As a matter of fact, I think yesterday the trade deficit blew out again further. That's happening with a weak dollar. So that should tell you that the dollar needs to be even weaker.
Yeah, that's interesting. You know, it's one of those things where, you know, Trump is out there creating this quote unquote war. But even if he's bluffing, one of the things I was saying is this might actually cause other countries to renegotiate. And maybe there might be some positive that comes out of this, despite the fact that not having free trade is a bad thing for the U.S.
Well, first off, tariffs slow trade. I mean, they're an obstacle to trade, and that's during normal times. And these are not really normal times because the world is now more indebted than it's ever been. And if you slow trade, you're slowing, if you want to call it velocity, you're slowing the generation of cash or income, if you will, which makes the debt harder to pay. And I think a lot of people are not looking at it from that standpoint, that tariffs depress trade, which depresses cash flow at a time when cash flow is most needed because there's more debt than there ever has been.
Right. Well, it's an interesting thing, and I was thinking about this yesterday, the concept of a trade deficit. And I'm wondering if it's even a good metric, because anytime you buy something from someone else, in theory, there's a trade deficit if they're not buying an equal amount or more from you. And that's not always necessarily an indication of your financial strength. But I guess it's the fact that we've seen tens of thousands of factories close and lots of jobs shipped overseas that we're feeling the impacts of these trade deals, and it's being shown in the trade deficit. What are your thoughts on that?
Well, I think if you go back to the basic nuts and bolts of it, this is showing why going away from a gold standard in the first place was a very bad thing, because it used to be that if you ran a deficit, you paid in gold, and you could only run a deficit for so long because you'd run out of gold. And in essence, that's what happened to the U.S. We ran out of gold. We closed the gold window in August of 1971, and gold was no longer allowed to be the arbiter, and it allowed the U.S. to pay for the deficits with freely printed dollars. So, and obviously that's what has and is irritating the world, is that the U.S. is basically freely printing dollars that truly have no value when all is said and done, and they're importing real stuff and paying, make-believe pay. It's the never pay. I've always called it the never pay theory or never pay strategy. In other words, you pay with dollars and you promise with more dollars, but you never really truly pay. You never really truly settle. Because settlement can only be made in a real money, which is either silver or gold, or real products.
Well, the fact that precious metals right now are not showing, all-time highs and shooting through the roof is a simple proof that the economy we live in is just an alternative reality. And I'll give you another example. When we would get positive economic results, I would say positive in quotes, and this happened quite a bit during the Obama administration. We would get positive results, and the stock market would actually go down because that would signal possibly tighter monetary policies, higher interest rates, and maybe a pullback on QE, and the market would actually go down on positive news. And this is that alternative reality. And I guess with this trade deficit or this trade war, I'm almost wondering if in this alternative reality that this stock market seems to live in is maybe it makes it go higher just because it always seems to do the opposite of what we expect it to do in the short term, at least.
Well, Kenneth, I wrote tangentially on that yesterday. I put out a public article. The title was basically MOPE, Management of Perspective Economics. And that's what's happened for years and years. I mean, the markets now all markets are 100% rigged. And MOPE, the Management of Perspective, has been used to create and further the narrative. And that's what it's all about. It's like they're trying to herd cattle, and at the same time don't allow the cattle to see what's really happening.
Right.
So you might want to put a link up to that. It is a public article. You can go to JS Mindset and copy that link.
Absolutely. We'll have that in the description area of this very video. All right, Bill. Well, let's get your thoughts on the new Fed chairman and the situation he's facing as he deals with the economy. What are just your initial thoughts on him? And what do you think he might end up doing here as we go forward? Do you think he's going to really pull back on QE, and is he going to be able to raise interest rates into this environment?
Well, first off, they cannot continue with the quantitative tightening, and they actually have shrunk the Fed balance sheet for the last 3 months or 4 months. They can't continue to do that because for every dollar that they tighten, it's actually sucking something like $10 out of the banking system because of the reserve nature. So they really can't do that. They can't raise rates. We're at a point, as I mentioned before, we're at a point where debt is at an all-time high. So you really can't tighten because what you're doing is you're making debt unrollable. In other words, it can't be refinanced at a lower rate, and once you start raising rates and things can't be rolled over, then you have a credit crunch and this system comes down. One other thing about Powell is that he is of the mind of bail-ins, not bailouts. So you got your bailout guy. You have President Trump, who obviously understands and knows how to use bankruptcy, and now you've got the Federal Reserve Chairman, who is a bail-in guy. And we know that bail-in legislation has already been written and put into FDIC, so I would think that's where we're headed.
That's just crazy. I mean, to think that they would go into the banking system and bail in the government, or it's just be insane.
Bailing in the banks, not bailing in the government. It's bailing in the banks. In other words, they're using taxpayer money to pay for bank losses. Last time around in 2007, 2008, they did bailouts and they used taxpayer money. This time, they're not going to use taxpayer money. They're going to use depositor money.
Well, that's even more of a reason, which I was going to say, is that to have money off the books. If you have some physical gold or physical silver, that's money that just can't be taken away from you or just zeroed out from your bank account.
Right.
I mean, that's insanity that they would do that.
That's Jim's get out of the system strategy. You take capital out of the system, you put it into silver, put it into gold, have it out of the banking system, whether it be in your possession or in a non-bank vault. That's capital that's out of the system. It's also wise to get your stock certificates and have those issued and sent to you so you have the certificate in hand, because let's say you have your account with broker ABC and they go broke. It may be 3 to 5 years before you get your certificates and they unwind the whole thing. So if you have your shares in hand, if markets are open or when they reopen, you will have the liquidity, you'll have the use of those shares, and they won't be tied up in a bankruptcy of your broker. So getting out of the system, getting your capital out of the system is very important.
Right. Well, Bill, the Dow Jones had a 4-digit down day not too long ago. This was headline news. But then it's inched its way back. It really seemed like perception is that it's going to keep inching forward. People don't believe that we're in a bear market, and we're still on that perception of a positive economy. And they seem to be doing a good job of maintaining that perception. But I guess just what are your closing thoughts here on how long they can keep that perception intact before maybe the floor falls out from underneath the market and the financial system?
Well, to be clear, things have changed. Interest rates around the world are going higher. Long-term trend lines going back to 1980, 1982. Those trend lines have been broken, and interest rates are going higher. So there is a big change in the credit markets. Everything has been held up by credit, and if credit is weakening and we see higher rates, we are, in fact, in a bear market. And I would just caution your listeners and ask them to look back to 1929, look back to 1987, look back to 2000, look back to 2008. Each one of those times we had an initial break, and then things would calm down and the market started inching back. And we got to the point where what you're talking about right now, it seems like the market wants to come back. But each time the market didn't come back to new highs, and in fact really rolled over and flushed. And I think that's what we're headed toward, is a complete flushing.
Wow, complete flushing. All right, Bill, thanks for coming on Crush the Street. If people want to learn more about what you do, please let them know where they can go and what they can expect to find.
Well, you can go to www.jsmineset.com. The site is, if you go to it, it's a public site. You'll see articles, you'll see graphs. We do have a subscriber